Hey everybody, it's time to talk about the markets with Jim Cramer on the floor of the New York Stock Exchange. Jim, I want to begin with your real money column on volatility, some important messages for investors.
Yeah, I mean, I first of all, people have to understand that the market's no longer 930 to 4, okay? It's particularly the fact that at 401, this XIV collapsed and then brought the market down the next day. These fixed products, the margin calls are all over the place. What I urge people to do is recognize that they have to take advantage of the fact that there's stocks that have gone down a lot for companies you like and you want to buy those, but understand that the market's going to whip around, and I expect most of the people who came in January to be blown out. Reminds me, by the way, go back and look at the Ken Fisher webinar that we did. Ken was saying that you're going to transition to Europe being cheaper. We own the EZU for Action Alerts Plus. I am with Ken. I think Europe has gotten way too cheap. That might be where the bargains are.
You did that interview back on December 13th,
yes.
So very interesting. Just staying with this XIV for a moment, I think you did a great job of highlighting the absurdity of volatility as an asset class.
Right, well see, what I like to do is call them as I see them. Maybe it's because I'm from Philadelphia. A lot of people are far more diplomatic than they should be. There are people who fooled themselves into thinking that VIX is an asset class, and it's been revealed as something that has absolutely no close. Now, the people that I say that about will react poorly because they don't like to be called out. But the people who use portfolio insurance in '87 got blown out of this. And now I think that they want to be, they're defensive because their investors are calling them up and saying, I just heard Cramer say it's not an asset class. You've told me over and over it's an asset class. I want my money back. And look, I have the right to say it. I've been around for a long time. I think that people who want to fool themselves are fine. But remember, you bought pieces of paper that settle at the end of the day. That is not even investing. That is just playing, it's not even blackjack where you have a chance. It's literally just rolling the dice. And I just really think that people have to recognize that they were at the track, and these are now rip-ups, and that it has nothing to do with actual investing. So investors who are in these products, call your brokers, sell them. Investors who are with hedge funds who are doing this and think that VIX is an asset class, take your money out of those and take your money out tomorrow. Break the lockup if you can, because you're playing. You might as well just take the money and go to Vegas. And I think in many ways the Vegas games are less rigged.
Well, it makes you wonder, are there any other types of products out there that could destroy the markets like the XIV did?
Well, I think the double and triple, I've been railing against them for a long time. The SEC should never have allowed them. There used to be much more volume in the market, and volume's dried up, so it's very hard to settle these products. The double and triples should all be banned, but I've been saying that for some time. And I know they won't be because they trade. It's where a lot of commissions are generated. And that's what drives the stock market, is commission generation.
Meanwhile, Jim, let's move on to earnings. Disney unveiling that ESPN Plus.
Look, $4.99, I'm going to get it. I like a lot of sports that I don't get to see. I think it's brilliant. I think Bob Iger is going to be, yet ESPN down 3, he's encouraged. Once it merges with Fox, we will not talk about ESPN. We will talk about the cord nevers going back to programming and watching on this. The stock should be up. It's not up, and the reason why it's barely up is because it is doing this merger, so you can't just go in and start buying it. But the buyback itself has been very, very strong. Iger's changing the company, and Disney should be bought here.
You brought up cord nevers. Bob Iger mentioned that.
That's why I mentioned it.
Yes, saying that people are coming back to those cheaper options.
Moving on. Jack DeMundo.
Yeah, there you go. Moving on, Jim, Snap. Quite a change.
This is, I pretty much committed to memory. Okay, so Snap, it's about personalization. Personalization using augmented reality, artificial intelligence, developing your own, let's say, identity on Snap using the Snap camera. The average, all their costs are coming down sequentially. All the revenues are going up sequentially. The EBITDA improving sequentially. And that's important because it's not just year over year. It was a remarkable acceleration, not unlike what happened with Facebook when Facebook figured out mobile. So Snap's a buy, and I think it can go much higher over time.
Another stock doing pretty well, Michael Kors.
Yeah, I mean, Kors, I stopped trading on that. Tapestry, not the Carole King kind. Estee Lauder, of course, the high end. The high end of the department store is doing quite well. Inventories are lean. Coors has expensive product. It's selling like mad. Jimmy Choo turned out to be a good deal. A lot of people laughed at that, thought they paid too much. So when you see this, PVH, North Face will be very good. That's VF. The cold weather's really helped. Canada Goose is very, very good. Should be bought here. It was underpriced when they did the deal. The luxury goods trade is back.
And there's a read-through to Nordstrom, which we're going to talk about.
Yeah, let's save that for
on our Action Alerts Plus call,
that,
so stay tuned for that. Meanwhile, Jim, who do you have coming up on Mad Money?
By the way, can I just understand? The market looked really down. That was phony, okay? You had the futures down 277 at quarter 5. That was phony. It was phony, meaning that it's just being traded. It's being what's known in the retail industry as being footballed. It's being kicked around by people who don't know what they're doing, or by people who have to try to blow out of these VIX products. And so it's don't trust anything. Certainly don't trust closing prices. Go back and read my Real Money piece again. But I really feel strongly that individuals who came in December when it was mostly euphoric, they're going to have to get blown out. And I hate that. I don't want anyone blown out. But they obviously don't understand that the asset class of stocks has a lot more risk than people thought. The asset class that was VIX was never an asset class. And again, I invite the people who think that it's otherwise to send me any email that you want. I'm not going to read it, but you should certainly send it.
Well, and you've called that January move in stocks parabolic.
Yeah, and parabolic moves don't last. And by the way, those who say, well, Jim, you got bullish on the way down. I sold a lot of stuff. We sold a lot of stuff for Action Alerts. Stay tuned for our show. On Tuesday of last week, because we said it's too parabolic. So we did put that money back to work into the sell-off that was yesterday after the down 1,000, because we felt like we had too much cash. But again, if it's going to be artificially down because of bozo managers who are going to be blown out, I want to take advantage of that. And again, take your money out of the VIX products and take your money away from the charlatans who might be running your money in hedge funds. And again, I apologize to the investors who are in those hedge funds, but not to the managers themselves, because they should know better. They are the Cleveland Browns.
All right, Jim. We'll keep watching that.
Hey, someone's got to be the Cleveland Browns.
XIV.
These guys are 0-16. The people with the XIV, they're 0-16. But we're supposed to stick with them? You want to be a fan of the Cleveland Browns? Well, maybe you're from Cleveland. I turn the channel off. I invite you, once again, please send me emails, and I will put it in junk, and that's the end of it.
Jim, who do you have on Mad Money tonight?
Whatever. Ben O'Dora, who's the terrific CEO of Clorox, reported a good quarter, but the stock got slammed. Didn't feel there was enough organic growth. And Hasbro. Hasbro did not have a great quarter, but maybe that's expected when you have Toys R Us kind of just hanging on last legs. We'll probe that with Brian Goldman.
All right, we're looking forward to that. That's tonight, 6 p.m. Eastern on CNBC. Jim and I are going to continue the conversation only for club members on ActionAlertsPlus.com.